Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London. These are the stories that set your agenda. Gold, silver, copper all hit record highs while stocks rally in Asia as investors bet on a strong finish to 2025. Oil gains as the U.S. intensifies a blockade on Venezuela with the Coast Guard in pursuit of a third tanker after boarding another vessel this weekend. Plus, the Trump administration defends the decision to remove several photos from the latest release of the Epstein file, saying it was done to protect the victims. Well, happy Monday morning. Let's get a check in on the markets this morning. Looking at the futures here across Europe, down just a little bit, about 1/5 of 1 percentage point there. Eurostoxx futures down about 12 points. The FTSE futures, similar story, down about 1/8 of a percentage point this morning. S&P, on the other hand, up about 1/4%. That adds to the rally we saw on Friday. S&P futures up almost 1 percentage point, erasing all the gains of the week. That continues into Monday. Same thing for NASDAQ. NASDAQ rallied hard on Monday, up 1.3%. That continues into the session again this Monday morning. When we go across asset to see what else is going across the asset spectrum this morning, we are looking at gold at a new record high, 1.5 percentage points up. That is the new record for gold. You have $4,400 a troy ounce, and Brent crude also catching a bid after what we've been seeing off of the shores of Venezuela. A third tanker, we understand, in pursuit by the U.S. Coast Guard. U.S. Treasuries, on the other hand, up a little bit this morning, about 4.16%, and Bitcoin catching another rally about 1 percentage point. Let's see how the Asian market session is faring with Min Min Lo in Hong Kong.
Hey, Ollie, it is a happy Monday indeed here in Asia. We are seeing green across the board, and it did seem like after the very volatile week last week, the dip buyers came in to stabilize the market, especially the tech shares, and it looks like we could be set up for the center rally after all. The tech shares gaining and driving up the Kospi, the TAIEX, the Nikkei up by close to 2%, and the Nikkei as well is also supported by the weakness in the yen after the BOJ rate hike on Friday. Despite the FX chief from Japan this morning warning against excessive FX moves, we continue to see the yen at the weakest end in about a month. If we flip the board, you can take a look at where the yen is, I believe about 157 level, and some analysts are saying that 160 could be in sight for dollar yen, just given how futures contracts are pointing to more demand for shorting the yen. And here you can see the yields pointing up across the board, the 2-year yield hitting above 1.1%, the highest since 1997, and that doesn't bode well for the upcoming bond auction, 2-year bond auction taking place on Christmas Day. So we'll be watching that. But what else we're watching in Asia also, if you flip the board, is Mothreads, because that's a Chinese tech company that over the weekend unveiled 2 new generations of chips that it says is going to be better than NVIDIA's Hopper series, the H100 or H200 chips, and is closing the gap with the Blackwell series of chips. And here you can see big gains across most of these chip stocks in Asia. SMIC up about 6.3%, Hua Hong as well up by 5%. Ollie.
Thanks very much. Min Min Lo in Hong Kong with the wrap-up of the Asian markets. Now let's take it to the commodity market. Oil prices are in focus today after Bloomberg reported that the U.S. is still pursuing a third tanker near Venezuela. This as President Trump intensifies an oil blockade of Nicolas Maduro's government. For more, let's bring in Bloomberg's Stephen Sapuchinsky with the latest of what's going on there off the coast of Venezuela. Stephen, if you could just for us illustrate the scale of the sort of Venezuelan blockade right now and how much oil is now at risk.
Yeah, so I think earlier this month we had the Trump administration seize a sanctioned, a U.S. sanctioned oil tanker, and then he put a blockade saying that they were going to also be stopping any other sanctioned oil flows. I think there was a wide expectation that that means unsanctioned vessels or maybe even empty vessels would be fine to continue going to Venezuela as long as they weren't leaving the area. But over the weekend, Trump stepped that up again. They seized a non-sanctioned non-sanctioned vessel carrying Venezuela crude, which the U.S. said is carrying, sanctioned fuel. The U.S. has sanctioned those oil exports, so they were able to board that vessel. And then now they're pursuing a third vessel, which is not carrying any oil, but it's on its way to Venezuela. According to analysts and those who follow the market very closely, that third vessel is seen as part of the shadow fleet and has ferried sanctioned oil in the past. So overall, Trump's effort at setting up a blockade is is going to likely fall down to whether or not other ships are willing to try to take that risk. The risk is that they could be boarded, that they could be seized. And if that does happen, that's going to reduce Venezuela's oil exports quite significantly. Now, the impact on the market so far, I think it's more of a shock and bang sort of thing, and you're seeing prices kind of jump a little bit because of that as a knee-jerk reaction. But when you actually take a step out and look at the fundamentals, the oil market isn't really that affected. Venezuelan crude makes up less than 1% of global demand, so even if you take a lot of it off of the market, especially since we're going to an oversupplied oil market next year, more so than we are at the moment, there's ways to find alternative supplies. So to summarize, yes, Trump is ratcheting things up. Yes, there is an impact on prices right now, but in the long term, the market is likely going to be able to find replacements.
So, Stephen, it's a pretty muted reaction in terms of the impact that it's going to have on the broader oil market. What kind of impact is this happening on the Venezuelan economy? How much pressure is being brought to bear on Maduro? Do we have a clear picture of how much pressure this instigates?
I mean, this is a much larger impact on Venezuela itself, their economy, and the leadership than it does on the broader oil market. Venezuela needs that crude, those crude sales, far more than the Chinese need it, for example, purchased through shadow fleet vessels. Now, they need this because they need the currency, they need dollar, they need some way to prop up their economy, some sort of sales to help them there. So, according to analysts, if this were to continue, this would be a huge hit on their economy. It could lead to more inflation. It could really hurt their coffers and also put further pressure on a government that's under attack by the U.S. government. So when you look at that all together, it does seem like the Trump administration is aiming for some sort of regime change, and this is their way of doing it through at least economic means.
Well, Bloomberg's Stephen Stepchinsky, thank you so much for bringing us that latest off the sort of coast of Venezuela there and how much the impact will be on the oil market. Taking from oil to gold and silver. Gold and silver both hitting record highs amid heightened geopolitical tensions as U.S. President Donald Trump intensifies the blockade on Venezuela that we were just talking about. For more on that and the hopes for a year-end rally, let's bring in the Bloomberg M Live strategist, Ven Ram. So, Ven, is the Santa rally on? Can we call it at this point in the year?
Morning, Oliver. Good to be talking to you. I think that, there is definitely a Santa rally in the works, especially if you look at commodities and U.S. stocks. I think what is happening with commodities is interesting because it is usually the goal that kind of sets off silver on a rally. But this time around, it's the other way. It's silver surging higher and higher on the back of the supply squeeze story. And that tail is wagging the dog, which is gold. And gold has gone up to a new record today as we speak. So I think that, gold is going to go further as well, perhaps in the first quarter. Why do we say that? Because there's seasonality in gold. In the first quarter, in 17 of the past 20 first quarters, gold has rallied because that ties into the seasonality of a heightened wedding demand in India and in China for the Lunar New Year sales. So that augury holds well for gold and silver in the first quarter. And of course, stocks. There's no reason to be selling U.S. stocks at the moment for traders because there's the story of artificial intelligence propping up valuations. So it does look like Santa is coming to the markets this time.
And part of that story is, of course, what the Federal Reserve is expected to do next year. We've had some comments out of the Cleveland Fed saying that maybe it's time to take a pause and see where things go. What do you expect from the Fed next year? And how much is that playing into both the rally on commodities, but also the broader equity market?
Well, the Fed has outlined one more rate cut in 2026, according to the December 2025 dot plot. So if they take it to heart, I think that we should be getting just about one or probably two rate cuts, depending on how the labor market functions from here on. We had one very low inflation print in November, but that has been distorted by sampling issues. So it would be hard to read into that, which is what Beth Hammack mentioned over the weekend. So I think that, if you look at average PCE inflation, Oliver, this year, it's been hovering around 2.8%. So with Fed rates already at 350, there is not much of a case for them to keep going lower and lower And for them, they may want to preserve the level of restriction in the Fed funds rate. So I think that, the Fed is going to be restrained, not be able to cut rates as much as investors think they will be able to cut rates. But gold and silver, to your point on gold and silver, I think they are their own trajectories. I think their rallies have gone far beyond what would be mandated by rate cut expectations alone. So there is an element of speculation there. So I think that there is no incentive for traders to take too much money off the table there.
Well, Ven Ram, thank you very much there. Gold and silver decoupled from the Fed. M-Line strategist Ven Ram, thank you very much indeed. The Trump administration has defended the decision to pull several pictures from the latest release of the documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files include thousands of pages of pictures, phone records, and notes from investigations, but many of the documents were heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
Bloomberg's Miles Miller there for the latest on the Epstein file release that we got there on Friday. Let's get to the week ahead and all the things that we were watching this Christmas week. On Tuesday, we're going to get that delayed U.S. GDP third quarter reading. The expectations are for a print of 3.2 percentage points there coming in on Tuesday. Also on Tuesday, the Euro area new car registrations. We have seen some really impressive numbers from new EU car registrations in the last couple of months. We're expecting that to continue. October was up about almost 6% in terms of the sales. We're going to wait that November number a little bit later in the weekend, watching very closely the electric vehicle sales alongside that as the EU stepped away from some of its climate targets on combustion engines. And on Wednesday, U.S. jobless data, Christmas Eve, U.S. jobless claims. We're expecting those to continue to signal limited job layoffs. Bloomberg Economics estimates initial jobless claims to come in at 223,000. 1,000. You can get a roundup from all the stories you need to know on your what's going on today on this edition of Daybreak. We're focusing obviously very much on the silver rally, the gold rally, everything that we're seeing there, and obviously what's going on across in the commodity space as well as in oil. As we understand, the United States is pursuing a final tanker there off of the coast of Venezuela. Terminal subscribers can go to DAYB Go. Coming up, we'll dive a little bit deeper into the crypto markets as Bitcoin sells off into the close of 2025. Are there brighter days ahead? We'll ask the CEO of crypto analytics firm Kaiko. That's next, and this is Bloomberg. Welcome back to Daybreak Europe. Let's get into the crypto sphere a little bit here today. Crypto is set to end the year lower despite a risk-on period for stocks and demand for havens like gold increasing in the last couple months of the year. The cryptocurrency is headed for the fourth annual decline in its history, and the first that didn't coincide with a major scandal or industry meltdown. To dive a little deeper into the market, we are joined now by Ambre Soubiran, the CEO of crypto analytics firm Kaiko. So, Ambre, thank you so much for joining us this morning from Paris. We'd love to get your perspective on sort of what is driving crypto at this point. When we thought, or I thought at least, I had some understanding there was a coupling to gold. We have that massive sort of decoupling into the end of the year. What's going on?
So I think the decoupling is more an indication that crypto, and specifically Bitcoin, is now its own asset class. We've seen a very significant shift during the year and a fundamental change in the types of flows we're seeing in the crypto markets. Earlier in the year, we've seen a lot of participation in ETFs and digital asset treasuries, and that pushed market depth to record high, as well as provided some form of liquidity floor. That has somehow withdrawn in the second half of this year, but it was more a signal that institutions are shifting from momentum buyer to price-sensitive allocators. Mm-hmm. And I think this is more an indication of the industry maturation rather than a weakness. Mm-hmm. And what we're seeing in the markets is basically deeper order books, tighter spreads, and lower volatility.
And so how do you account for that sell-off in the last couple of months?
I mean, first of all, there's a correction, just a natural correction from the second half of the year that was very strong. Then we have seen the October 10th crash, which was quite significant. We've seen $2 billion worth of Bitcoin that was liquidated on the markets, and this is not something we can completely ignore. However, I think it's important to point out that the October 10th crash didn't break the market, right? It was more like it provided a reset, and it wiped leverage for a while. It flushed out the leverage. It controlled, it tightened the risk controls, and I think the investment became slightly more conservative, especially when we look at leveraged derivatives markets. That being said, it didn't retract any of the investor demand. I think it just transformed, a fundamental shift from the investors in how they become more kind of balance sheet risk-focused investors and rather just momentum buyers.
And so you've taken us through some of the lessons I think we've learned, some of the things we've learned about Bitcoin and cryptocurrency in 2025. Looking into 2026, what do you think are the catalysts that are going to be really driving the crypto trade going into next year?
Yeah. So we're seeing mostly three main trends, I think, that we're going to be driving the crypto prices as we enter in 2026. The first one is obviously all of the institutional inflow that is broadening the buyer base. And that is about durable buyer base, right? We're talking about identifiable institutional participants that are investing from balance sheets. And that, I think, is a structural change in the nature of crypto markets. So institutionalization is one of them. The second one, which I think is a very interesting trend, is perpetual futures. This is still driving somewhere around 60% of Bitcoin volume is driven by perpetual swap trading. And this is going to be interesting to see how it plays out over 2026. It's important to note also that most of the perps volume is concentrated on a single trading venue called Hyperliquid, and they're getting increased competition, and we're going to see that evolve. Now, the third interesting theme in 2026 is stablecoins, and stablecoins, we're going to see how that kind of moves into a more durable settlement layer for on and off chain, and how that becomes a structural piece of the market infrastructure. We've seen this year record volumes for USDT and USDC, And I think we're going to see large-scale stablecoin adoption. We're seeing regulatory clarity around stablecoins, and that will be a very important trend as we get into next year.
And in the things you're sort of looking for catalysts for next year, I didn't hear President Trump. How important is the President of the United States and him making crypto a sort of priority? Do you consider him still to be one of the catalysts here, and what could he do to support the market? And do you think that it's still a priority for him in his administration?
I do think it's still a priority for him. I think he did, completely create a release of the pressure, of the fear pressure that institutions had doing anything remotely related to crypto. He did that in a way that created some volatility and confusion about a year ago. But when we look at where we are a year from now, it's been overall very positive for the space, and we've seen much more regulatory clarity coming out of this. And I think getting into next year, we're past a point of no return when it comes to regulation and institutions interacting with crypto markets. And that has also released all of the pressure around initiatives about using blockchain as a technology, and this is all we hear about tokenization. Recently we've heard about the native tokenization on-chain of U.S. treasuries. I mean, we're seeing now so much more than just crypto, and a lot of that is due to the current administration around views around crypto and blockchain in general.
And I'd like to end on a very sort of unfair question, which is, where do you see Bitcoin ending the year next year, if you could make a call on that?
I've seen a bunch of assumptions around 200, 250, and I would agree with that.
Okay, well, thank you so much, Ambre Soubiran, CEO of Kaiko, joining us this morning from Paris. Thank you very much. Coming up, talks between the U.S. and Ukraine described as constructive, but still no deal to end the war. More on that later in the program, and this is Bloomberg. The U.S. president's most senior economic advisor has warned of, quote, administrative problems if the Supreme Court rules against Donald Trump's tariffs and orders refunds. Speaking to CBS's Face the Nation, Kevin Hassett said he's confident the Supreme Court will find in the government's favor.
We really expect the Supreme Court is going to find with us. And I also think that if they didn't find with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
And Spanish Prime Minister Pedro Sanchez has suffered a large defeat in a regional election. The People's Party won 43% of the vote with 29 seats, while Sanchez's Socialist Party won 18 seats. Support for Sanchez has been eroded in recent months by scandals and graft investigations, leaving the government increasingly isolated politically, despite Spain's strong economic performance. A group of private equity firms led by Permira and Warburg Pincus have agreed to acquire Clearwater Analytics. The deal values the investment in accounting software maker at $8.4 billion, including debt. The private equity group also includes participation from the Singaporean state investment company Temasek and key support from Francisco Partners. And coming up, Russia threatened legal action if its assets are used in the fund to fund Ukraine's war. More on that next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Gold, silver, and copper all hit record highs, while stocks rally in Asia and investors bet on a strong finish to the year. Oil gains as the U.S. intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding another vessel over the weekend. Plus, talks between the U.S. and Ukraine described as productive and constructive, but President Zelensky says the signals from Russia remain, quote, only negative. Getting into a little bit of the cross-asset picture here this morning as we head into this morning of trading here in Europe. We are looking at futures for the European stocks 50, up about 1/5 of a percentage point, almost a quarter there at 5,778. FTSE futures 100 down a little bit, just a hair down about 1/8 of 1 percentage point. Where the real action is the S&P futures and the NASDAQ futures building on those gains on Friday. S&P futures were up almost 1 percentage point on Friday. They wiped out all the losses that we had seen on the week. That builds again today. NASDAQ futures up almost 0.5 percentage point. We saw them close up about 1.3% on Friday, so that rally continues into Christmas week. When we look across the boards, across asset and the rest of the sort of market, gold, of course, hitting a record high for the year, once again beating what we saw back in October. $4,400 a troy ounce is what we're looking at this morning, up 1.4 percentage points. Brent crude catching a bit of a bid after those headlines we're seeing off of the coast of Venezuela. U.S. Treasuries for their part up about, let's call it 2 basis points this morning, and Bitcoin also catching a bid, up almost 1 percentage point this morning. Moving on to Ukraine, the U.S. Special Envoy Steve Witkoff says talks with Ukrainian officials from Ukraine and Europe were productive and constructive. Meanwhile, the U.S. U.S. Secretary of State, I should say, Marco Rubio, says that the U.S. is still hoping for a deal that satisfies both sides.
Only a negotiated settlement gives us the opportunity to end this war. A negotiated settlement requires 2 things: both sides to get something out of it, and both sides to give something. And we're trying to figure out what can Russia give and what do they expect to get, what can Ukraine give and what can Ukraine expect to get. In the end, the decision will be up to Ukraine and up to Russia. It will not be up to the United States. So that's the role we are trying to play in this, and that's why you see so many meetings going on. This is not about imposing a deal on anybody.
Well, Bloomberg's Jill Desis is in Hong Kong. Jill, thanks so much for joining us this morning. We know that these conversations and many of these negotiations have sort of moved underground in terms of what their actual content is since we saw that 28-point plan initially. Do we have an idea of what was discussed this weekend, excuse me, and how much progress was made?
Yes, Oliver. Well, what we've heard from the U.S. side, at least, is that they did discuss that, 28-point plan. Of course, that's something that obviously the initial plan put forward by Witkoff was met with quite a bit of resistance from the European side. But although Zelensky and the Europeans did counter with something, so it does appear that there was something in sort of the gist of a multi-point plan that was discussed at this meeting. They also talked a lot about U.S. security guarantees for Ukraine potentially. That's something that we did get an inkling of about a week or so ago, might be something that is moving forward the needle a little bit, that the Europeans were maybe more satisfied with the U.S. being more open to the idea of sort of Article 5 style security guarantees for Ukraine. And then they also discussed more about the economic development for Ukraine. So, obviously really, really big picture topics here that are being discussed, a lot of which has had, significant amount of movement in the last few weeks. So, the fact that we've got these sides saying that these were productive, constructive talks does indicate that at the very least, there does seem to be some negotiation on some of those finer points when it comes to the main things that we're looking at, this idea of a, multi-point peace plan, and then obviously, also talking, a little bit more about those security guarantees.
Yeah, we also got an offer for trilateral talks that would include the United States, Ukraine, Russia, possibly the Europeans. Do we have a clear idea if we're at a point now where that is sort of an appropriate measure? Do we think that can happen, or is there any other kind of sequencing we need to be paying attention to for the next couple of days?
Right, Oliver, I think, it's actually, unfortunately, still a little bit vague at this point. So what we heard from Zelensky last Friday as these talks were about to, sort of get underway, was that, he was saying that it was really sort of contingent on how the outcome of the U.S.-Ukraine talks went to, whether or not he thought that they could actually get to that point where you're looking at some kind of a trilateral. The latest we heard from Zelensky on Sunday was, effectively that, they were in discussions here, but obviously, as we've been discussing this idea of maybe Russia being the sticking point here. It could be possible that we get something, but I think at this point, obviously there's still some of these pretty major sticking points. Zelensky is not willing to give up a lot of these territorial considerations that Russia obviously wants, and something that the U.S. has been trying to negotiate on. So it does seem like that does continue to be a sticking point, and I haven't heard anything out of the talks so far, whether this weekend or prior, that really indicate that we've seen any sort of a true meaningful breakthrough there. Obviously, Donald Trump himself has gotten, incredibly involved in these kinds of conversations, meeting with Zelensky, meeting with Putin. Whether we actually see something that results in sort of that three-way meeting, I think we just don't really have as much info as we'd really like from the outcome of this meeting, as promising as it is for them to say that talks have been productive, to actually see whether or not we've got a trilateral meeting in short order.
Well, Jill Deeses, thank you so much for your time this morning out of Hong Kong for the update there on those discussions that took place over the weekend in Florida. The Russian president, meanwhile, has threatened legal action if international reserves are seized. Vladimir Putin was speaking after the European Union decided against tapping those Russian frozen assets and to help fund Ukraine's war effort.
We will protect our interests. Where? Well, first of all, in the courts. We will try to find a jurisdiction that will be independent of political decisions.
Well, for more on this and what we saw out of Europe on Friday, we're joined now by Elina Ribakova, non-resident fellow at Bruegel. Elina, thank you so much for taking the time this morning. I'd like to get into some of the sort of big news we got out of the Europeans last Friday. We do have a 90 billion euro loan that will go to the Ukrainians, what they are calling, a major breakthrough. And obviously that is for Ukraine, which we know was running out of money in the first quarter of the year. First, let's just set up what the significance of getting that money to Ukraine is and where that puts Ukraine going into 2026.
Well, the IMF estimates Ukraine's financial needs about $65 billion over the next 4 years, most of that coming up in the next 2 years. That is the big issue for the moment. And this money goes a long way to be able to deal with that. Then we have the issue of military needs. The military needs are significant as well, about 60 billion per year. And this money, 90 billion, covers Ukraine for about a year and a half.
And looking at what the actual deal was and what was struck there, I was at the meetings there on Thursday and into Friday morning, and I was covering it. I did not have a very clear idea of how exactly this was working. We understand that it's joint debt. It's going to be backed by the EU budget, but at the same time, it's kind of backed by the Russian assets. So you have European leaders saying that actually this is not a risk that the European Union and member states are carrying, and yet they still seem to have kicked the can down the road on what to do with those Russian assets. What is your understanding a couple days out from this of how this is actually going to work?
Well, it still remains very confusing. We'll look forward to more comments from the European Union members, from the member states, as well as from the European Commission, because the article says at the moment 90 billion against the budget headroom in the EU. So it's common borrowing against the budget headroom. At the same time, the 3 smaller countries are exempt. So in the unlikely scenario where Ukraine sort of defaults on the loan, then the 3 smaller countries will not be liable for this money. So we're looking forward to hear more about the details. However, it's not surprising we don't have all the details because the European Commission European member states had to come up with it at the last moment. And therefore, it's also a very big deal. Let's remember the common borrowing in the EU. We've had it during the COVID period, and since then it's been very small. So it is a big deal for European Union to go ahead with this.
And thinking also about what it tells us about European risk appetite and how, to what degree they seem to have been intimidated by Russia, potentially by the Trump administration. What do you think it tells us that they decided to not go for these Russian assets?
Well, it tells you that European Union is still very afraid to have a confrontational stance with Russia. And I think it's more important about sort of fractures in the European Union. Some countries are closer than the others towards Russia, and therefore there are more pressure points to apply to these countries.
And also looking at the Russian economy itself, I have a simple question for you, but it's actually a pretty complicated one, which is 4 years into this war, after all of these sanctions that we've seen on the Russians, how is the Russian economy faring? Do you have a clear idea of that? This is something that you study very closely. And looking into 2026, on what footing is the Russian economy?
Well, the Russian economy is in recession at the moment. It's unlikely we will actually see the numbers that will show negative growth, but for this last half a year of 2025, Russian economy has stalled. Most likely there will be either zero growth or maybe very marginal growth for the year as a whole. Next year, it's a big breaking moment for the Russian economy because they're running out of funding, not enough to stop the war, but they're running out of this sort of cyclical boost to the economy, and they need to find a new way to expand production, and they've been struggling with that.
And looking at the sort of peace negotiations, is this a moment at which the Russians can sort of afford to end the war? They've sort of basically geared their entire economy to be a wartime economy. Obviously, when you reshape an economy to that degree, stopping a war the next day is going to have a major impact. Do you think that that is why part of the reason the U.S. administration is so insistent on having them come back to the global economy, because that is a sort of necessity for the Russians if they are to end this war?
It is a necessity for them, but let's not forget that the geopolitical objectives have been much more important for this administration than any economic objectives. Yes, that will be critical for them to reintegrate back into the global economy, but they have strengthened their ties with China, and I think the economics at the moment is subject to the geopolitical objectives.
Do you think there's anything the United States could do to force them to the negotiating table? Could those, for example, Lindsey Graham sanctions, those secondary sanctions that put, 500% tariffs or whatever it is on any country buying crude oil, buying natural gas from the Russians, would that be enough to bring them to the negotiating table?
I think pressure on the Russian oil and gas exports is the key measure to try to slow down the economy and their ability to finance the war. However, it is not the secondary tariffs. It's rather the secondary sanctions on the financial system that can make it or break it on the oil and gas exports as well as the export controls.
And it seems the Europeans have managed to get themselves sort of a seat at the table, maybe a seat at the kids' table in these sort of negotiations. Do you think there's anything left for the Europeans to do that could actually earn them a seat at the actual table here?
Sorry, could you go ahead? I just sort of had a break in my connection.
No, I was just wondering if you think there's anything left for the Europeans to do to earn themselves a seat at the table in terms of these negotiations. Is there any room for them on sanctions, Russian assets, anything else?
I think Europeans have the critical role on the shadow fleet, as well as developing their own ability to do secondary sanctions, as well as being part of the negotiations with backing up Ukraine in these negotiations.
Well, Elina Ribakova, thank you so much for your time this morning, non-resident fellow at Bruegel there for the latest update on the assessment of the Russian economy and the path forward for Ukraine. Coming up, we'll discuss how AI is transforming cities next year and the role of entrepreneurs in innovating towards net zero. Will 2026 be the year of autonomous cars? Our next guest thinks so. That's next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Last week, the European Union rolled back plans to phase out combustion engines by 2035 in the latest challenge to the energy transition. It caps a year in which the COP Climate Summit achieved so little that it was rated 2.5 out of 10 by Bloomberg NEF, competitive category for least productive years on climate technology. My next guest argues that it won't be politicians who will solve the climate challenge, but rather it will be entrepreneurs. Tommy Stadlen, thank you so much for joining us, co-founder, general partner at Giant Ventures. Thank you so much for joining us this morning. Let's deal first with this question of climate. Is this sort of the mirror in which the kind of climate ambitions sort of died officially? Is there more going on beneath the surface that we should be aware of?
Well, you mentioned COP. I've been going to COP since COP 15. I think it's now COP 30, 31, and we're still no closer to the politicians sorting this issue out. And I think the reality is no action is going to be taken by the UN or by politicians. But there is incredibly meaningful action being taken by entrepreneurs all around the world. And this was the year, I think, 2025, where in some ways climate died a death in terms of economic interest. But that is so completely different to what's going on under the surface. I think climate's had a rebrand. So the same technology companies which are performing extraordinary feats are now rebranding themselves as American dynamism companies, or they're working on AI. But the reality is, I believe the climate is warming, whatever the man in the White House may say. And I believe, therefore, that if we get anywhere close to decarbonizing the global economy, that is the biggest investment opportunity of the century still. But what's happening is that the companies which require a green premium, they require governments or customers to pay more for climate action, are not going to win.
Is there a way in which, and this is maybe doing some acrobatics to try to build the sort of climate narrative here, but in the way in which sort of AI, all this energy generation that is required for these data centers, for running these AIs, particularly in Europe where you have a continent that is basically very poor in natural resources to generate that energy, could that be a catalyst that actually builds the argument for renewable energy in order to run these things?
I think that's absolutely right. You know, everyone talks about AI, but the fundamental requirement for AI is clean and cheap power. And that is the big opportunity for the renewable sector. We've been here before in, you know, the clean tech 1.0 boom and bust, and everyone was saying what a disaster that was economically. But actually that produced solar and wind, which is now some of the cheapest energy in the entire world. Solar is, you know, the cheapest form of energy, and you can have enormous success in powering data centers, not just from those type of renewables, but also companies like Radiant, who we backed at Giant, who have signed up $1 billion deal with a data center to provide cheap and clean nuclear energy. So it is a massive opportunity for green tech to be part of the solution to AI and not be left behind.
Now I want to get into some of your kind of bold calls here for 2026, saying that 2026 is the year for physical AI, going out of the chat box and into what?
Absolutely. So I think, you know, so far this year, your viewers will have been using AI to generate images, to maybe make presentations, do legal work, and that's all really exciting, using chatbots for that type of thing. But I think what's even more exciting is how AI is going to transform the physical world. And I think you'll see companies like Cusp AI in London who are using AI to discover new metal organic frameworks that can redesign things like semiconductors or electric vehicle batteries. Those type of companies are going to not just transform industry, they're going to completely redesign it from first principles. So I think 2026 is the year that AI kind of gets out of the chatbots and into the physical real world to start fundamentally redesigning it. And that is an enormous economic opportunity.
And you think that 2026 is also the year of the autonomous car? It will be driven around in 2026. Is that going to be just in the United States, where it's going to be a little bit easier regulatorily, or are we going to see that in Europe here as well?
Yeah, well, so Waymo is coming to London and Tokyo in 2026. And I think, you know, there's a classic quote about technology, which is the future is here, it's just not evenly distributed. Right. In San Francisco, a quarter of all ride shares are done by Waymo, more than Lyft now. And it's almost zero outside of San Francisco. So if you go to San Francisco, it kind of feels like the future's arrived. It hasn't yet here in London, but it's coming in 2026. And I think you'll start to see very quickly cities feel completely transformed. And by the way, autonomous vehicles can save, you know, 1 million people die every year from car accidents. That can be completely transformed through autonomous vehicles.
And you also see coming of age for European tech. I feel like we've heard about that for a couple of years now. Why is this year different?
So I think that the year just gone is actually a really important year where we've seen some very, very large rounds for AI companies, but also companies like Revolut. Revolut hit a $75 billion valuation this year. So in Europe, we've always had the technical talent. We've always had enough venture funding, actually, in the last few years. What we've really missed is those big success stories, which get to very large scale. And when companies like Revolut get to $75 billion, that created 200 millionaires so far. Those people become not just angel investors in the next generation, they become fantastic founders themselves who go on to start companies. At Giant, we backed a number of ex-Revolut founders who bring the rigor and the kind of dynamism from that company. And so the role models and the trickle-down effect of talent and angel investors, that takes a lot of time. And yes, we've been talking about European tech for a decade plus, but it does take time for the big winners to emerge and then for this sort of second-order effects to trickle down. And we're starting to see that now.
And I'm wondering if you have a view on European tech, particularly on the continent of Europe, and particularly now with this European Commission that is theoretically supposed to be cutting back regulations, supposed to be sort of generating more investment into the private sector for European tech. Do you see that as something that's going to actually make a difference? Is it come into your thinking at all in terms of what the Europeans want to do?
Yeah, well, so we got a view at this, John. We invest 50% Europe, 50% US. And our US friends are often laughing that kind of the only thing that Europeans are good at innovating is the little bottle cap lid, which stays on top and annoys everyone. Actually, I think there's far more going on.
Many memes on there, yeah.
Many memes. But the reality is, you know, Europe minted 28 unicorns this year so far already. So there is enormous progress on technology, and I think we have every bit of a right as the US, particularly on AI and physical AI, at the intersection of technology and some of our big industrial incumbents.
Well, Tommy, thank you so much for joining us this morning. Greatly appreciated there for a view of tech going into 2026. Tommy Stadlen there, co-founder and general partner at Giant Ventures. Excuse me. Now some other news making stories this morning. A power outage across large parts of San Francisco on Saturday led to major disruptions with Waymo's driverless cars freezing mid-journey, potentially some of the risk of those autonomous cars. Passengers who were in those Waymo cars at the time said they were confused by pedestrians crossing at junctions where traffic lights had failed. The Tesla CEO, Elon Musk, says his company's robotaxis were unaffected by the power cut. An engineer has become the first wheelchair user in space, blasting off with Blue Origin. Severely injured in a mountain bike accident 7 years ago, Michaela Benthaus rocketed away from West Texas on Saturday with Jeff Bezos' company. The launch marked the 16th human space flight for Bezos' tourism company, using New Shepard, a small craft built to send people to short distances at the edge of space, as well as to conduct research missions. Disney's Avatar, Fire and Ash, has debuted as the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title film this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We are looking at a couple of charts here to close out the day for us here on Bloomberg Daybreak Europe. The rally in the MSCI Asia Pacific Index, you can see just gathering steam here into the end of the year. And you really think about where we've been this year. This absolutely cratered out back in April, back in Liberation Day. No sign of turning around ever since then, really rallying until the end of the year. And moving along to the commodity space, we're looking at precious metals. Gold has been what we've been talking about. We've got a record high there, but there's another metal that is outperforming even gold. That's rallied 25% in the last 10 sessions. That is platinum. You can see it there, absolutely reaching for the skies there, actually beating gold substantially over the last year, up 118%. Gold up only about 70%. We're also considering, as we close out the year, the dovish year that we've seen from the central banks and the sort of rate cuts we've seen across the board. It's going from the ECB, 100 basis points there. Looking at the Bank of England, another 100 basis points. Bank of Canada, another 100 bips, and the Federal Reserve coming in at 75. Some pretty active debates about what's going to happen next year. And of course, the BOJ, really, of these major central banks, really the only one to have raised rates by 25 basis points this year. Looking at the futures heading into today's session and opening trade, we're seeing stocks in Europe down a little bit there, about down 1/5 of a percentage point. Similar picture for FTSE futures, down about 10 basis points. But again, I think where the action should be focused and what we're watching very closely, S&P futures building on that rally on Friday, up almost 1 percentage point on Friday, wiped out all the losses, in the NASDAQ up almost another 0.5 of a percentage point after gaining 1.3% at the end of last year. And we'll be speaking a little bit later to Fed Governor Stephen Myron on surveillance at 1:30 London time. That's it for Bloomberg Daybreak Europe. Opening trade is up next.